Good morning, everybody. Welcome to Phoenix Trading Strategies. Today is November 21st, 2014. We're going to be looking at trades that happened overnight and potential trades that are happening this morning. Before we continue, let us go over the disclaimer, which is very important. Hopefully some of you have had an exciting week. It's been a very strange week. It's amazing how towards the end, the very end of the week, they decide to make these tremendous moves. Here's a disclaimer. Future stocks and spot currency trading have large potential rewards but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the future stocks and Forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy or sell future stocks or Forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in this website. Past performance of indicators or methodology are not necessarily indicative of future results. And that's basically it on the disclaimer. So I want to welcome you again to Phoenix Trading Strategies, where basically we define the institutional mindset and show the retail traders the decision process, the protocol that the market makers and banks are taking in order to execute their decisions in the market. At the end of the day, that is the reason why we're here. We are here to learn why they did what they did and how we can benefit from their mistakes. So, being that said and done, let's go and take a look at a few charts and go from there. I was looking at the pound dollar actually a few minutes ago, and I actually liked it to the downside, and it's a great example of a trade to the downside. Now, I'm expecting this one to actually come down. It's about to hit this level right here, and if it hits this level, because it just broke this one, if it hits this level, then it could bounce back up. Unfortunately, the dollar is getting so strong right now that I don't see it bouncing back up, and it could end up here at 156.34. So it's currently trading at 156.69. So it still has potential for a good move to the downside. In this regard, I like this trade, and one of the reasons why I like this trade, and I want to explain this, because sometimes our decision process is made, and it's made with wrong information because we don't understand exactly what or why they're doing it. Now, one of the things that we're going to talk about today is volume and how they use volume, but how you can see the volume in the live edge real-time market. And that's something that you've never seen before, because right now, for instance, on this specific candle, they're currently bidding 164 million, they're offering 199 million, and they have a net of 37 million negative. And you can see how basically this candle has come down. Now, why am I able to tell you, the amount of volume that they're pushing? Well, it's reflected right here. We designed this volume indicator to basically show you two things. One, you can read the volume per candle, as it has already happened, and we set up this data box to do so. So as you can see here, for instance, this previous candle, they had bid 152 million and they had offered 187 million with a net negative number of 35 million, and that's why it came down. This current one right now is at 184 million bid, 215 million offered. So they're selling pretty aggressively. They're actually selling 24 million more. Now, knowing the volume and the live edge of the market is important. However, knowing when to look at volume is more important. Because one of the problems that traders do is that they can't really tell when they should be paying attention to the volume. And this is the one thing that we've been able to create with Phoenix Trading Strategies, is the reason when you should be looking at the market. Why? Because there are specific hours when they begin to unfold their agenda and they have no choice and they have to start increasing their volume, their positions. Why? Because maybe for some reason they are rebalancing their portfolio. Maybe they're, they have to manage their risk better. Maybe they have too much exposure with the British pound, and so that's why they're selling it, and that's why the dollar's gotten so strong. Same concept, for portfolio management. A lot of hedge funds do this. They do this all the time. Now, that in itself should explain why there are certain moments when the volume kicks in. Now, as a retail trader, you never really know when they're going to start to increase their volume and start to drive the market. You never know that. It's something that, you've always been the last to know. Well, one of the things that we created was we created a number of algorithms, but in these algorithms, one of the things that we combined was volume. And any time that they started to increase their positions and start to manipulate the market, because quite honestly it's manipulation, then at that point we basically start to give you signals. And so this is one of these signals. These white dots here represent an algorithm that anytime there's an increase in volume, you're the first to know. And normally they'll try and finish driving their volume to a certain position, and by not breaking it, like in this case, this is a great example. We've seen this before. Anytime they make this type of move but do not challenge or breach this level at all by at least 10 pips, then normally they come down. They literally bounce right off of it. And that's what's happened right now. This thing came down from 156.80, currently trading on 156.59. So it's practically a 30 pip move. Right here exactly is where this is going to hit. As soon as that hits, then we know. Now the question is, and I'm sure this is one of the questions that many of you have, is will it continue to go down? Oh, can everyone hear me? I have someone that lost my voice right now. Can I do a sound check? Hello? All the time? Okay, great. So it's just abroad that this is happening. No problem. So getting back to this, this is one of the things that, as traders, like for instance, after a move like this to the downside, and you start to see a retracement to the upside, then you want to know, is it going to continue to go up, or is this going to come down? Well, right now we're a little late in taking this trade. And I don't like to take trades if I'm late in the game. Why? Because another will present itself. But this is a good example as any. As this trade came down, and this one came down not quite a lot, because it wasn't a really aggressive move per se, but it was a decent move, a 76 pips. Once it was here, now there's no way that I was going to take a trade to the downside any further. However, if it did retrace, which is exactly what happened here, I want to know exactly when and why, if any, this was either going to continue to go up or come down. One of the things that most people cannot see and cannot do is determine when are they going to turn back, when are they going to change. And they start looking at different support levels and resistance levels, and they can't seem to understand or quantify when the banks are actually going to start to drive their volume in order to set up the market. Well, one of our algorithms does that very clearly. And this is a good example of as any. And I'm actually going to circle this because it's very important that you guys have a clear understanding. This right here is telling you, as soon as these white dots start to come out, they start to actually demonstrate that the volume is going to start to increase significantly. And if you can understand this simple concept, you'll be able to find trades. Now, many of you may say, well, you know, this looks like a counter move trade that's set up. It was. This is definitely, you know, a counter move. Why? Because they did not finish going all the way up. They came halfway after a 76 pip move and came back. However, anyone could have gotten caught going long. But as soon as this started to identify itself and present itself before your very eyes, then at that point, and only at that point, would it make more sense for you to actually say, hey, wait a minute. This is telling me that they're not going to continue to go long, that they're going to go short, which is exactly what has happened. Now, the question is, when do you go short? Good question. And here is where it becomes even more clearer, because this is a question that many of you have been asking. When do you go short? Well, if we identify the level here, and we identified this level at 6:30 in the morning, which is 3:30 a.m. my time, then we knew, number one, that they were going to start to increase their volume. Now, how do you identify the level where they're not going to turn from anymore, or where they're going to bounce from to go down? It was right here sitting in front of you at the open. And I will also draw on that one as well. See that one right there? And we're going to do one more. Historically, they're going to tell you the levels that they're trading in. They did it here, and of course they went up. Now, the minute you see this, if you don't see price action challenging and breaching this level, guess what? They're going to go up. See, in this case, they challenged it, they breached it, and they went up. But then they came right back down to it. And then they bounced right back up. As soon as they couldn't continue any further, they came right back down to it. So this little section alone, which was probably the least aggressive move, if you want to consider it that way, you were talking about 27 pips to the upside, and then 27 pips to the downside, and another 27 pips to the upside, and then they came right back down, and then they just collapsed. But when they collapsed, they came right back up to it. See, look at that. And now, of course, as I said, this thing's going to continue to go down. And more likely it'll come down to 156.35. But we're late in the game. You know, we saw it when it was up here. I don't like to take trades, you know, after they've initiated. If you miss a trade, you miss a trade, you know. With my software, with this software, you will be able to identify trades that normally you wouldn't take. And on top of that, you don't have to lose sleep, depending on where you live. Because, you know, some people live in Europe, some people live here in the States. If you live here in the States, then basically the European session can be very challenging for you to stay awake for. But the Asian session and the US session are probably the only sessions you can trade. Well, if the software is telling you in each session when you should be looking for a trade, then you don't really have to lose sleep. I don't. You know, as much as I like to see the European session moves, since they're great moves, I don't like to lose sleep. So I would have not have been awake to take this trade to the upside or to take this trade down. It just wouldn't have made sense for me, because I love my sleep. However, during the Asian session, as you can see, I did take this trade from here and I exited right here. And why? Because it identified the level for me. It told me this is an easy trade. I'm going to measure it for you. I made a total of 28 pips. That was my trade. Here was my entry. Here was my exit. The same 27 or 28 pips that were made here and that were made to the downside. I saw, number one, that they weren't going to continue to go down. The indicator clearly identified that the volume was going to start to increase, just like it clearly identifies it here. And that's why you're seeing this move. And they're actually going to come down to 156, 35. I mean, they're trading right now at 156.46. But what I'm trying to get to you is that this trade was done in the afternoon. I didn't lose sleep. These were the easiest 28 pips I made. Now, I didn't take the trade down any further because, quite honestly, if you can make one trade per session and make that count, then you win. Because now what you're looking for is that you're looking for something that can consistently give you the results that you're looking for and eliminate that fear of action, that fear that you don't know what's going on. You can't understand why they're moving the market. It's taken me 12 years to understand why they're moving the market. I started just like you as a retail trader 12 years ago. And then in 2008, I became a broker. It was actually 2007 when I started to prepare and work in the industry. And then I got licensed in 2008. But I had the fortune of working with money managers, CTAs, really good traders and prop traders, and a lot of retail traders as well. So I was able to learn and understand what made them tick, what made each one either make the mistake or have the success that they had. But the one thing that they could never have is the timing of when the volume was going to be increased by the banks, by the market makers. Now you have it. No one else out there has this algorithm. This algorithm is probably the most valuable algorithm you'll ever come across. Now, the trend dots, a lot of people use trend dots. It's not a big issue. It's a visual. It just confirms. But in this case, look, even before the trend dots changed, you would have seen that they were going to go short. Now, what did the volume tell you? The volume pretty much told you here that they had exhausted all their bullish volume into this one candle and that eventually they were going to start to decrease, which they did. They made one more move up exactly to this level, and then they came down. Look at it here. This is another great example. They came up, they set up right, the volume basically was clearly identified that it was going to be increased tremendously. They came back down exactly to this level, right here. It was right in front of you. They came down and then they pushed up. And this was an 82 pip move. But they came up, they came right back down, and they hit this level again. And then they made the move to the upside. Here, they came down. They came right back up to this level. So what we're doing is that we're actually mapping out and pinpointing the price that they're going to go and hit one more time before they change direction. Now, of course, they've come down. And they're probably going to come right back down to this level. So when you see that, you shouldn't fear it. Now the question is, where are they going to stop? They're going to stop right here. Here's where they're going to stop, 56.40. Why? Because this level is clearly identified right here. I'll also put a square around this section. Right there. So this level is clearly identified again. And so what we've done is we're mapping out the price interest points where they're going to literally go, hit, bounce from, and then go back to the next one where they were previously at. Now, that is something that very few people out there can comprehend and understand. And this is exactly what's going to happen. They're going to hit this same level one more time. Now, how's their volume right now on the live edge of the market? They've basically bid, and this is funny because this one is a very bearish candle right here, but they're currently bidding 260 million long, and they're offering or selling right now 210 million. So there's a positive number of 53 million. So you're also able to tell with this indicator whether this is really a bullish candle or a truly bearish candle. This is not really a truly bearish candle. This is a bearish candle defining that they're going to slow down eventually and then bounce. Why? Because it has more bullish volume in it than it does bearish. How is that possible? You couldn't see that before. So when you start to put two and two together, it starts to make sense. You know, it's like these levels right here. You know, these basically are levels that help you identify if they're going to be continuing to go in that direction or if they're not, if they're going to stop. Now in this case, once they get too far from it, then know for a fact that eventually they're going to bounce right back and challenge it, which in this case they did. But again, they really were going to hit this level. So that's what you're getting with this. This is a really good example because number one, it's on the live edge of the market and you can see the levels that they're going to and the previous levels that have identified where exactly they went to again. So when you start to see that, you're not going to miss these trades. This was a very simple trade, 28 pips. I took it long and I closed it up here. Didn't lose any sleep over it. Very simple. This right here would have been an easy 30 pip trade if I would have gotten in here or here. I was too late. Clearly a great example of a trade. Let's take a look at another one. I was looking at the Euro Aussie as well. Now the Euro Aussie, just like the Euro dollar, basically just came down, crashed. You know, good example. Why? Because again, what you're seeing here is what no one else out there is willing to share. This thing came down 287 pips. This trade alone would have made your week. Just one trade would have made your week. Now, why was this one very selective? Very simple. Again, let's go back to identifying what made this trade unique. This little indicator right here made, forgive me. Let's try that again because I need two boxes in. This little indicator right here is telling you when exactly or what exactly they're going to do. Number one, they're not going to be challenging anyone any further. Number two, it's clearly stating to you, pay attention. This isn't hard. This makes trading easy. And if you can understand and comprehend that, you will figure out trading. This system was created to be easy, not to be hard. And it was created to identify the one thing that every retail trader is missing out there, to know exactly when they're going to start to increase their volume and momentum. Wow, strong statement. That is really what it comes down to. Because yes, the trend dots are very good at a visual, but this little indicator right here, as soon as they increase their volume, and let's take a look at this, because bottom line is, let's see what the difference was in volume. So here, for instance, we could see that this candle right here, they basically put 108 million long, 92 million short, 16 million long. They didn't do anything to the upside. This next one right here, 83 million long, 107 million short, 24 million net short, nothing. This next one, 113 million long, 134 million short, 21 million net short. It came down, but hardly. This next one didn't really move at all. Look at that, 91 million long, 92 million short, pretty much break even. And then the next one was 97 million long, 102 million short, 23 million short. What did this tell you? Because these other candles here had a little bit more volume, but the momentum wasn't there. So this thing is telling you when the volume and momentum are actually going to kick in. That is where the real value is of this system. Because the trend dots, yes, in this case, once the trend begins, you can clearly see there is no change. And this level here basically acts as your hard stop, basically, or soft stop. It's a stop level. So if it's not challenged at all, then it means that this is going to continue. In this case, I would not take this trade long unless I saw that it would breach this level. However, after a move of 287 pips, you sort of question, well, maybe they're going to move another, 25 pips to the downside and make it a 300 pip move. The question is, can you simplify your mind to forget everything else that you've learned and concentrate on the important things of this system, which can make your trading life easier? Because bottom line, we're all looking for something that makes our decision process easier, faster, so that we feel comfortable managing the risk that we're going to take on. Because bottom line, every time that you implement a trade, you are going to take risk on. Let's take a look and see where this is at. See, didn't I say that it was going to bounce right off of this level? That it may come down, but it didn't. It's right here. So now that we know that it's bouncing from this level, let's see if it actually does. I would wait for this candle to close before I actually take a position to the upside on that trade. Let's go down to the 5-minute and see exactly how it's trading. Yeah, see, it's too close here from where it's currently trading right now. There's only 10 pips. Too much risk for 10 pips. Doesn't really make a whole lot of sense, and the sentiment is really telling us that it's going to continue to come down. The volume, as much as they tried pushing it up, as you can see, it's starting to decrease to the upside and starting to increase to the downside. So this may make one more push to the downside. And you can see, look, they identified this level right here. So where is it bouncing off? This exact level right here. Right here is where it's bouncing off of. And it's going to come down one more time probably and hit this level. That's basically it. on that end. So let's take a look at another example. This is the pound CAD. Now, I know that most of you just trade the majors, and that's okay. But once in a while, you should consider taking a look at the outlying pairs, the exotics, because all it is a glimpse to really determine, number one, when was the volume increased? Number two, when was it decreased? Number three, are there any dots that are momentum and volume dots that identify when they're going to actually start to set up the level? Now in this case, this was really a giveaway. Now there's nothing like trading it and seeing it in the live edge of the market. But you can only do that if you're sitting in front of the computer. And believe me, I've dedicated hours to this. Why? Because I like making my life easier. And I like making my students' life easier as well. As soon as I saw this was a very simple range. It was a very easy range to trade. There was nothing extravagant about it. You were looking at 38 pips from top to bottom. They came, they didn't break it, they didn't breach the level to the upside, they came right back down, and then they took their sweet time, but eventually they came right back down, and then they came right back down again. But this time they breached. So if this was a 38 pip move, this was a 60 pip move. Now this happened during the US session. However, towards the end of the US session, they came back, and since they had already entered a different level, they clearly identified that level, and it never ended. Look at this thing. I mean, it was forever. This was forever telling you, this isn't going to go long. This is eventually going to go short. And it gave you hours. I'm talking hours notice that the market makers were not going to take this long. And eventually, they just basically let it fall. And the fall from that point to that point was, let's quantify this, 172 pips. You could have simply put the trade and gone to sleep and let it just run. And you could have easily put a stop loss at this level here, which would have been no more than maybe 10 pips. This thing is actually showing you that you can minimize your loss or your risk because it's telling you that it will not breach this level at all. That is what makes this so important. Now, maybe you don't have the heart or, the determination to take a trade like this. Maybe you're just looking for 15 to 30 pips the way I've been doing it, And believe me, I don't lose sleep over it. It's the one, if anything, it's the one thing I don't like to lose sleep, and I don't question my decisions anymore. Why? Because these trades are very easy to understand and comprehend, especially when I have such verification. The level was here, the level was here, the level was here, and then boom. And they had done it previously. So I knew that they were going to bounce right off of this just like they did this here. And especially after it repeated itself 3 times, then that's the same reason why as soon as I saw this appear and I saw that it correlated with this price, as soon as they hit this price, if they didn't break it and go up, they were going to come right back down, which is exactly what they did. This move was not a complicated move to miss out on. If you were there at the right time, this move generated you 27 pips. Hey, if you know that a specific trade is going to take place and you can actually quantify to the pip where it's going to hit, then at that point, 2 things are going to happen. You're either going to determine, number 1, do I go in conservatively? Or number 2, since I know exactly what they're doing, should I go in aggressively and take those 27 pips as if they were 100 pips. Because now, with confidence, you can actually increase your lot size and know that your stop loss is never going to be hit because they're not going to hit it. Now, would you have taken this based on this volume? And, I'm going to add this other indicator here because I want you to see it's important that you determine that the volume indicators that they provide in these platforms really are not that great. And this is in general, okay? This is every platform out there gives you volume indicators. What's the problem with these volume indicators? The problem with these volume indicators is that they show you nothing. Now, if I see down here this volume, and I see that this is trading here at the way it's currently trading, the one thing that I'm afraid of is taking a trade. Why? Because this volume isn't telling me a thing. Not one thing. It's telling me, don't do it. Don't do it. There's no volatility in it. So, is it fair to say that even from that perspective, they have counter-programmed these volume indicators? Because they have. So let's eliminate this one now that you can see that. And now I'm going to show you the difference why you would have taken it. Let's remove that from there. So what was my reasoning to take it? Number one, clearly their algorithms clearly gave me the reasoning to hit this. Why? Because they hit this level and they were going to bounce right back up to this level. But that wasn't the reasoning. It's not just identifying the level. It's identifying when they're going to increase their momentum and volume. Now their volume here was not that significant, because if we look at their volume, you're going to say, but wait a minute, there's hardly nothing here. Look at this. This was a bearish candle, and it did, let me bring this down. And this red one right here did 150, no, this one did 69 million long, 77 million short. So it was really negative, and it was. The next one did, oh God, why is this not acting up? The next one did 106 million long, 70 million short, 36 million net long, and nothing. Didn't move at all. But you know what? Because it held and did not breach this level, I clearly saw opportunity here. And I knew that eventually it was going to go up. So I waited another two candles. I waited for this candle to close. This one did 96 million long, 125 million short, 28 million net short. Whoa, this was a bullish candle with bearish volume? Yes, that's exactly correct. This next one, 28 million long, 60 million short. 32 million net short. And then finally this one kicked in, 104 million long, 72 million short, 33 million net long. Now, why did I wait for this one? I actually waited for this one. As soon as I saw that this one had more bearish volume, but that it didn't come down and retest this level, I said goodbye, and I took that trade. Very simple. There was nothing to really think about. Here, you would have had the same thing. As soon as you would have seen this volume right here, that was 321 million long, 266 million short, with a net of 55 million long, and it didn't move or budge, and you have this signal right here, my God, what more do you want? It's clearly telling you, go short. They're going to go right back down. So this is what, these are the, trading is not meant to be complicated. We are the ones that complicate it. We are the ones that cannot, for the better of us, understand why. One of the reasons why, very few retail traders have had success is because they're looking at chart pattern recognition, and they're very good at it. I made the system easier for you, because if you're good at chart pattern recognition, this will make you a superstar. If you were afraid to trade, this will take the fear away from you. If you were looking for a reason to actually win one day, I just gave it to you with this technology. Why? Because no one out there is doing exactly what we're doing. What are we doing? We are clearly identifying the moment when the banks are going to start to drive momentum. That's what this indicator is. It's a momentum identifier. The algorithm is working with precision. And it's not the market conditions, it's just the market. Let's take a look at the New Zealand. This one's always interesting because no one likes to pay attention to it, but it can be a really active little devil sometimes, and sometimes it can be very easily traded. Now, I like to look at the 15-minute, and I'll go down to the 5-minute, and I'll even go up to the 30-minute because sometimes I want to identify where the levels are at. Now, this one here was really complicated, not easy. However, look at this. And again, let's put the pointer, let's put the box, let's box this in. What did we see here? We clearly saw a level that was identified. What did we see here? We clearly saw another level that was identified. Now, anytime that I see these levels identified, I don't care if they breach them. I'll tell you why. Because eventually, once they come right back and they're getting ready to move, they will do just that. They will set up, and that's exactly what happened here. Here, this basically told you with precision that there was a move getting set up, and this was going to be, again, a level where they were not going to go down, but they were going to go long. As soon as price action traded above this level right here, this thing went long. What was the total move on that? We'll see. That was a 64 pip move. It clearly was a news event. Now, what's the difference between this trade and, the ones that we've looked at? Really nothing. We were looking for these levels all the time. Anytime that we saw this indicator literally pop up right in front of your eyes, it said, wake up, pay attention. Now, would I have normally taken this trade? I might have. However, I would have preferred if I would have been able to identify this level right here. Then I would have been clear that this was going to just go scream to the moon, and I would not be concerned with it at all. Now, if we go to the smaller minutes, we'll go to the 5-minute, and this was not really the favored pair to trade. Quite honestly, it was a very difficult pair to be looking at. But again, in this case, what happened? Because they came down, this is another good example, and I'll explain to you why this is a great example, actually. Two things are going to happen here. Okay, we identified that level, and we've identified this level right here. Okay, now in this case, they did breach it. However, they hit it right here, and as you can see, they bounced right back up. And more than likely, as soon as price action meets with this level, which will probably be around 79.05, then at that point we can probably expect it to come back down, not to go up, if it doesn't breach it. Now, if it doesn't breach it at all, then this is a great short trade. Why? Because you have the potential in this particular trade of going from here to here, which is 40 pips. That's basically what you're looking at. You're looking at this trade to potentially come down 40 pips. Now, it'll come down first to this level, but if it breaks this level right here, which is 78.86 from 79.02, then at that point you pretty much know that it's going to come right back down. It's that simple. But I feel, and actually, you know what? Let's take a look at how they're reporting their volume right now, because you can't really see a tremendous amount of volume in this. So, for instance, this candle right here was 40 million long, 27 million short, 13 million long, and I didn't see any move to the upside. This one, this current one right now is 25 million long, 16 million short, net million, 10 million long, net to the upside. You know, I'm going to wait for it to close. If I don't see a tremendous move to the upside, then I see just a clear opportunity of taking a trade short. That's what I see. So we'll come back to this one and see if they do exactly that. Let's take a look at the US yen. This is always a great one to look at because it's been active pretty much, and there have been some good trades in it. Let's go to the 15-minute. There was a question, so forgive me if I didn't answer. Okay, New Zealand yen, New Zealand Swiss, New Zealand USD, Euro New Zealand, and Pound New Zealand. Okay, so those are the ones that you're looking at. Okay, so the US yen. Now, clearly, you know, I love it when this happens and when they actually make the channel, because it's so easy to trade these channels. It's so easy to take these trades and not lose sleep over them. So basically, these trades, this trade made 43 pips. Not bad. And I can clearly tell you, these were probably the easiest 43 pips you could have ever gone after. And especially if it repeats itself. My God, I mean, it just doesn't get any better than that. As soon as this came in, but then it repeated itself, you were not supposed to go long. You were supposed to go short. Why? Because that's exactly what they were going to do. They were going to come right back down, which is exactly what they've done. Now, because this level actually started to go up a bit, then they're not going to come right back down to this level, but they're going to come exactly to this level, which is exactly what they've done. And that's why you see this bar actually going long. But we will put the candlesticks for you to see better. You see, it came and it hit it right on the money. Right on the money. Now, it's getting ready to go long. A nice, clear example. It's not, you know, this is not complicated. This is simple. Look, if you remember grade school, the one thing I loved about grade school was that they would tell me, you know, connect the dots. I loved playing connect the dots. That's how simple this is. It's that simple that if you can actually, what we've done is something that no one out there has done. You know, a lot of people use moving averages, and that's fine and dandy, but the moving average isn't going to tell you exactly when the market makers are going to start to increase their volume and drive momentum into the market. That's the one thing that they're not going to do. So if I would have taken this trade 43 pips and then seen that it went right back up here and didn't breach it, and then I saw this come again and that it was going to come down, that means that in these two trades alone, you had the potential of making over 80 pips. 80 pips. You literally made your afternoon and your night without losing sleep or without anxiety, without fearing. What if? The unknown. This is the reason why traders fail and lose, because there is so many X factors that the unknown is hard to bear because it creates losses. But in this case, we're giving you a tool that clearly eliminates doubt, which is the one thing that you as a trader must eliminate from your thought process, because otherwise you will not be able to trade ever. That's it, bottom line. You won't be able to do it. You know, this trade right here, now that we see that it's gone up, and now that I've seen that it's actually breached this level, the Euro Aussie, I'm interested in looking at it. Why not? You know, I want to see if the market makers are actually going to drive this. Now, why is this important to me? Granted, they did identify this level and it wasn't identified here. Because they breached this level, that means they're not going to come down. That means they're going to go up. The sentiment went from highly bearish to bullish now. I actually like this trade long. The volume is nice and consistent, not aggressive. The radar is telling you that there is strength in the euro and weakness in the Aussie, and that this should go up. What would be my risk if it's at 143.02? Really nothing. I actually like this trade. Because from this point, if it doesn't come back here, and you know, it's more likely going to come up here. What would be my risk? My risk would be maybe 25 pips, if that. Maybe 25 pips is what I would risk. I wouldn't risk more than that. Why? Because I feel very confident that if it breaks this level right here, it'll come up to 144 even. Why? Because it came down 287 pips. You don't think there's a retracement trade here? Are you kidding me? This thing is telling you that it's starting to trend to the upside. This thing is telling you that it's getting bullish. The volume is currently bullish right now. This thing is telling you that the euro is getting stronger and the Aussie is getting weaker. You know, when I have three levels of confirmation and they've broken this level, then that clearly tells me that, you know what, this is potentially a great trade. And at the same time, it also tells me that there is no way that they are not going to retrace this at least 50 pips after they did a 287 pip move. There has to be some correction because their exposure on this has been tremendous. Here, let's look at this indicator here. Let's open this up. What do you see here? You saw that the euro and the Swiss were taken completely out of balance in the 15-minute. Completely out of balance. You know, they attempted the same thing with the Aussie and with the New Zealand and now the Canadian. But clearly, it was the euro and the Swiss that were taken out of balance completely. And they can't sustain this level any further. they have to have some correction, some rebalancing in the portfolio to try and bring them back into balance. Now, because this was an aggressive move, make no mistake, there will be a serious correction. So we should see this particular trade, where is that? This particular trade, we should see it actually, come up. Not a lot, but there will be a move. There will be a move. And if you look at trading from that simplistic point of view, you will have success. Here, you can clearly see that they're not going to go down any further. Look how many pivots they have. 1, 2, 3, and the pivots get higher. That's another signal, another reason. Again, this software is not meant to make you think a lot. This software is meant to make you think less, but react to opportunity. That is where the difference comes in. And if you can look at the market from that simplistic point of view, then great. If you've learned how to trade using chart pattern recognition, this will make you better. If you understand how candles apparently work, I think I just proved to you with the volume indicator that they've even counter-programmed against candlesticks. Because the candlestick doesn't really reflect the true volume inside of it. We're giving you what is currently inside the bid and offer, inside the candle. This is a real roadmap to the trade. A real roadmap to the trade. Why? Because if I go to the higher minutes, and we'll go to the higher minutes right now. Actually, let's go to the 30-minute and see how that one looks. Now here, for instance, you have 2 pivots. Now, let's try and go here and reduce this. And the reason why I'm doing this is because I want you to see that this level has been identified before. And we're going to draw a line right here. What does that tell you? That tells you that this ain't coming down any further. Now here's another level. We'll identify that as well. So when you start to see these things come out and take place, the only thing that you should be thinking about, and this is why this is clearly, that's why I said if it breaks this current level, it'll go long. So now that we've identified that, let's go back to just actually seeing it where it makes sense. Let's go down to the 10-minute now. So now we've identified basically these levels. As soon as this one was hit, it wasn't coming down any further. So if you go back in history and you go into higher time frames, you will identify the levels that they're actually going to hit. That means that not only have you identified your entry, but your exit as well, your potential exit. That is what you're looking at. That is what we're giving you. I'll take a look at the pound dollar, because remember we said that it wasn't going to go down any further from this level, and look, it bounced. And it's got to come up to actually this level right here, which is right here. So this one came down 27 pips. It's actually going to come up just about that, 27 pips. Why? Because they're mapping it out for you. Our volume and momentum algorithm is mapping out those levels. So it's clearly telling you that this is not complicated. This is very simplistic. It doesn't get any easier than this. And if you can relate to trading easy and eliminating fear, then you will be able to trade these markets. Look, like I told you before, I took this trade here right out the Asian Open. I saw that they identified volume and momentum coming into the market. I waited for them to get to, where I would feel more comfortable based on the volume they were reporting. It did. I took it. It went long. I got out with 28 pips. I didn't care that it was going to come down anymore because I took my trade out. Look, it's going to come out exactly to this level. It bounced right off of this one. We'll go to the smaller minutes because we were looking at the smaller minutes on this one. So this is not complicated trading. This is very simplistic. And that's the only thing that you have to understand. That trading is not meant to be complicated. It's meant to be simple. Everyone else would have probably taken this trade short, but we had identified this level and that it was not going to go down any further, and it went long. So if you're willing to take the time to go and map out these levels that have been previously reported, then that's the only homework that you have to do, because then at that point you can actually, the volume will actually start to make sense. The sentiment will actually start to make sense. The support and resistance levels will start to make sense. That's the only thing that should be in the back of your mind. So for those of you that are interested in learning more about this, probably next week we're probably going to start trading the European session, and we'll probably start doing it from 2 a.m. Eastern to 4 a.m. Eastern. So I'll keep you guys posted. Well, we'll send you out an email so you can sign up for that. It's different from these sessions from Mondays and Fridays. And I'm not going to do the European session every week. I'm only going to do it twice a month, and then I'll probably do another 2 days the Asian session. I like the Asian session because it's very simplistic, and I can find easy trades like this one that I took for 28 pips. Didn't really lose any sleep over it. This one, we missed it as it came down, but we identified that it wasn't going to go below this level anymore, and then it was going to bounce right back up. And that's exactly what it did. And look, it's coming exactly right back to this level. If it goes any higher, great. If it doesn't matter. All that matters is that you were able to identify a trade that was going to take place. That's all that matters. Nothing more and nothing less. So, do any of you have any questions? This would be a moment to actually start, thinking about questions that you might want to address. Oh, the UJ, long or short? Let's take a look at that one. It's right here. Okay. Where it's currently trading at right now, I would be very hesitant to take it long from this point. Why? Because it's already started to come down, and it looks, since the dollar is starting to weaken against the other currencies, well, more likely it's going to start to do the same here. Based on how they're challenging this level right now, 117.76, I'd like to say that if it comes down short, it'll come down no more than 117.50. So you're looking at 25 pips to the downside. Now, the volume is clearly identified here that more likely it will come down. However, since it's already hit this level one time, I'm actually, only because this level came up is my only hesitation. But if anything, it'll probably come down to this level again, which will be 117.56 from where it's currently at. So yeah, I mean, if you were going to take this trade short, this would probably be the moment to take it. You're probably looking at around 20-25 pips. One of the things I like about this is that the sentiment is already telling me that it's bearish. Another thing is that I'm starting to see, the trend dots are bearish, and also these other trend dots here are also bearish. So yeah, this looks like a really nice trade to the downside. I actually feel comfortable, selling this right now. But I'm not looking for more than 20 pips. That's it. That's the max that you're going to get out of this thing. I don't think you're going to get anything more because it's clearly identified this level right here, and that's okay. I mean, if you're looking for short trades, you're good to go. Let's see. The next one is US CAD short. Let's open that one actually. New chart. Forex. US CAD. Let's close this, minimize this. 15. And let's see how this one looks right now. You're looking for a short. I would actually, on this one, wait. And my only reasoning is, let's see if we can identify, no, we can't identify any levels here. Let me see. Let me open this up. Data series, let's see how many days. Okay, let's put 30 days here. Looking for 30-day tick data. Give it a second. Okay. You're looking for this to come down short further, but I haven't clearly identified if there are more levels. And I need to identify if there are more levels here that are identified. Okay, one sec. Okay, this one right here is, this one right here is, and this one right here. So 111.96 was already hit, and then they went above 112.09. So I'm afraid that from where it's currently at, because they're identifying these, like I said, sometimes all you have to do is just go back in time. And it will clearly tell you what you should be looking at. They hit that level, so now let's expand this. Okay. So now that you have seen that they've hit this level and then they bounced off a previous level here, that's why you see this wick bouncing off of this and they went long. I don't really think at this point that they're going to go short. I think that at any given moment, because you're starting to see an increase in the volume here, and what in the, how did this get combined? I'll fix it later. So the volume here, as you can see, I mean, they basically gave everything they had in this one, and now it's been more bullish than anything. Now, granted, even though this is the median, this is the median right here. Right now, currently, there's more negative volume than there is positive, but you can see that these previous volume bars have been settling above the mean, and they've been more positive than anything. So I would actually wait for it, if anything, for it to come down again one more time here and retest and then go up. I would not take this trade short from this point because it could go long, it could go short. I don't have clear how can I say this, definition of where they're going to, of where they're at right now. You know, even the volume right here, look, it's, you know, right now they're currently negative 14 million. So it's bearish. That doesn't really tell me a lot. You know, I want to see more definition, and I can't see that. That's the problem. And because I can't see that, this trade doesn't really make a whole lot of sense to me. If it did, believe me, I would be the first one to jump on it. But it doesn't really make a whole lot of sense. Let's take a look at the New Zealand. This one looks like it's going to start to come down. Yeah, I would be more comfortable once it hits, the US yen hits here. Oh, definitely. You have to compare with other pairs, because only when you compare with other pairs can you really see. Now this trade, you know, the US CAD. Oh, this was the US CAD. You were looking for the US. Was it the US yen? No, it was the US CAD, wasn't it? Yeah, it was the US CAD. Target 1195 is what you're thinking. No. It already hit 1195 one time, and it's not going to go down any further, because there was another level here that was identified, which is exactly where this bounced off of. This was the first one they hit, but then they came right back to this one, and then they bounced off of it even further. So no, going down there would not be the trade. It doesn't make sense from that perspective. So, any other questions? This would be a good moment. Oh, look. This one, the Aussie dollar. See how it identified this level right here? It's telling you right here that it's going to go long. More likely it'll come up right back up here. So from 186.92 to 187.04 is more likely what it will do. Anytime that I see these dots come out, it's a clear indication that they need to basically reassess their risk with this currency pair. And so that clearly tells me, and because they don't breach this level, and if we go back in history, we'll probably find that this level was clearly identified elsewhere, right here, look. But when it was identified here, it went short. Now that it's identified here, they came up from it right here, and you can see that they hit this level exactly to the T. And then this one right here as well, when they came up, but this one is where they're currently at right now, and then they came down and they hit this level. So really what we're doing is mapping out these levels for you in advance. It just doesn't get any clearer than that. It really doesn't. I know that most of you are interested in making trading a living, but you can't make trading a living if you don't have the right information, the right tools. That is one of the things that you have to define for yourselves, what you want to do and how you want to do it. All I can do is basically guide you. That's it. But if you're interested in, in getting these tools, then I'm doing a special for the whole package right now, which includes all four indicators. It is $35.97. You can email me at ricardo@phoenixtradingstrategies.com, and I'll get you set up. It includes a 3-day webinar. It's not 3 days consistent one after another. We're actually going to break it down. We'll start on a Sunday, then we'll do a Wednesday or a Tuesday afternoon during the nation session, and then we'll conclude with a Thursday. So I'll give you 1 day in between, because there's a lot of information that we're going to go over. And I'm actually going to not only just show you how to trade, but I'm going to make you show me the trades. Because at the end of the 3 days, you need to be identifying these trades. And you will be, because this is not complicated. This is simple. Sure, hey, 3% every day is great. And if see, here's the thing, that one of the things that, that we're able to really pinpoint and identify is that because we're able to pinpoint and identify these levels, if you know exactly where they're going to hit, then you feel comfortable maybe putting up 15-20% of your account in one trade, so that it generates you, 3-5% return on your principal every time you trade. I like to have that comfort. I feel very comfortable now that I don't have to lose sleep when I'm looking for a trade. And look, it basically, didn't I say I was going to hit this level? It hit this level, and it hasn't come down from it. So, great trade to be in. This next one here is, see now that these dots came out, and because this level was previously identified, I'm not even going to think about getting out of this trade, because I know that it's going to come right back down, and it's not going to go up, because these came out. Basically, it tells me, actually, you know what? No, I'll reverse, because bottom line is they're going to change. Let's see if I can salvage a few pips out of it, but I'm more comfortable going down than actually going up because of these dots right here. These are a clear indication, and they weren't there before. That's the thing, that when they come out, don't challenge them. Don't challenge them, because you're going to lose. That's it. That is the bottom line. If you challenge this algorithm, you will lose. Good question. For November, I'm actually up right now. In these past 2 weeks, I've taken a total of, I'd like to say, 15 trades, and I've only had 3 losses. I'm actually up right now, percentage-wise. I'd like to say I'm up 20% on my account. It's not bad. That's pretty decent. And I'm not taking, I'm not losing sleep. So quite honestly, you shouldn't either. That's just the way I feel. If you lose sleep, then you're not going to be able to trade with a clear mind. A clear mind is not something, you need a clear mind. Bottom line is, without it, you can't. You're wasting your time. You're setting yourself up for failure. It's just one of those things that you have to be able to trade with a clear mind. Bottom line. Look at this. I told you it was Aussie dollar was gonna start to make a move to the upside. You can't challenge this algorithm. If you challenge this algorithm when it's right, and most of the time it's right, you're going to lose. That's the bottom line. So if you're interested in learning more about, what the webinar entails, send me an email. I'm more than happy to, explain it to you, or you guys can give me a call. I'm usually on Skype as well, but, if you want to, if you have some questions and you feel that, that you need to talk about it, then you can send me an email. You have my email. You can ping me on Skype, and I'll put my Skype name there. Or give me a call. Before you lose the fear from trading, lose the fear from actually speaking to me. Believe me, there are no dumb questions. There's only great questions, because the only way that you can win is, number one, by admitting what your flaw is. And number two, when you clearly identify and understand what's happening, which is what we've shown you today, you will be able to really, really move forward. Okay, question. If one day you decide to moderate the European session with someone, you can call me. Thanks, Tony. I appreciate that. I'll do that. So that's basically, all I have for today. I want to thank you very much. I want to wish you a very good weekend, and I look forward to seeing you all Monday morning. Hopefully we'll find some nice trades. In the meantime, adieu.